to have a quick talk about just what to expect over a full day in the market. So we've got 24 hours in a day. I think it's a fallacy. Most novice or beginner traders seem to think or have the understanding that the market ticks away steadily, fairly consistently over the 24-hour period. So I just want to show you a tool that I use, and it's available on the web. It's market24hourclock.com, and it's really, really handy. And it gives you a bit of an idea about where the volumes move and why they move. So we have a look at this line through here. This is the daily close and open. So you've got the end of the American session come through and the start of the next day's session. So you can see in the first 1 to 3 hours of the next session, it's basically only New Zealand market open, and then Australian market comes online here. So you've got Wellington and Sydney here. In the 4th and 5th and 6th hours, you've got Tokyo, Shanghai, Hong Kong and Singapore come on. So we've got a bit more volume pick up here. So just looking at that, you can sort of see, and it's fairly obvious to see why, when you look at this clock, that the first 2 or 3 hours of every day are going to be fairly quiet for the best part, because there's not too many plays in the market. So if we sneak around the side of the clock, we'll come around here. So it starts to get fairly serious about this time of day. So you can see we're probably 8, 9, 10 hours into the day here. When London comes online is when a lot of the volume comes into the market. Certainly a lot more traders come online. So basically the understanding is from more experienced traders that in the first 2 hours of the London session here, 1 and 2, and then the crossover between the end of the London session and the start of the American session, so the New York, Chicago. So you've got 1, 2, 3 hours up here. So those 5 hours, so 2 hours here and say 2.5, 3 hours here. So say 5 hours, that's basically half the market's volume for the day, but it's all consolidated into 5 hours. So if you just stop and think about it for a second, we've got 24 hours in a day, and we're saying that half of the volume for the market moves inside those 5 hours. So it gives you 19 hours for the other half of the market. So it's fairly obvious that in those 19 hours, the movements are going to be smaller, and it's obvious as to why. So I guess the point I'm trying to make is when you first get a daily close or a daily open, whichever way you want to look at it, a lot of traders jump on there in the morning thinking that there's going to be a heap of opportunities. And there is, in the sense that the daily close is very strong, and it's good for price action certainly if you're sitting on support and resistance. But the best thing you can do is do your analysis and put your trade on, whether it's a limit order, a stop order, or a market order. I would suggest at that time of day it's probably a limit order, just basically because you wait for price to move into areas during that session. So basically, what happens to the novice traders is they put their trade on and they sit there looking at it, and they start to burn energy, because sitting there at your screen thinking about it, you're starting to burn that energy that you've got for the day. And what happens is by the time the market really starts to move in that London session, in that sort of British-American crossover later in the evening, by the time you get to that time of day, you're burnt out. You've used all your energy in the part of the market where it's not really moving so much. So my thoughts generally are to look at the daily close or open, again, whichever way you want to look at it. Put your orders in, and then don't waste too much time. Sort of get away from the computer for a while, for the next 5 or 6 hours. I mean, certainly come past. I'm fairly strong on looking at H4 charts, so I look at the daily open, and then I'll put orders in if I like to put orders in for that day. It's not every day I put an order in, maybe only once or twice a week. But then I'll basically set my reminder and come back to the computer about every 4 hours and just look at the H4 closes, and basically see whether there's any extra information that add value to what I'm looking at or what I'm looking at coming up. I generally like to sit down on the London Open for a couple of hours. It's a fairly exciting time of day. You see a lot of volume coming into the market in those few hours. So it's always a good time. Even if you're not going to trade, like in the first 1 or 2 years, it's certainly worthwhile sitting there and watching the characteristics of the market change, because again, just mentioned earlier that we've got 24 hours in a day, but the market doesn't behave the same way all day. Like you can see the attitudes of the people in the different countries as they come online. Like, Australia trades differently to Japan and China, and then in London trades, for me, I think the London session is the most aggressive. Certainly a lot of fun, but you can get yourself in all sorts of trouble there if you don't know what you're doing. The American session tends to contradict the London session more often than not. Again, a very strong session. certainly in that crossover between the end of the London session and the start of the American session. But that's just an intuitive feel that I've built up over 5 years of trading. I think my point is that you guys probably should spend a bit of time there and have a look at it for yourselves. So the reason, guys, it's good for you to spend time there is to build an intuitive feel for the market yourself. I mean, I can sit here and talk till I'm blue in the face about my understandings and my experience over the journey, but the truth is you're going to have to develop your own understanding of it. If you look at something that you enjoy, whether it be a sport or whatever, use gym as an example. To say you hadn't done gym before, but you wanted to try it out, it would be unreasonable to think that you would just go in there and, you know, see people that have been in there for 5 or 6 years and just be able to do the same sort of exercises as those guys. You'd have to go in there and find your level of fitness and start there, and then work towards, you know, whatever your expectations of yourself were over time. And it would be unreasonable, I would have thought, to think that you would be there inside, you know, 8 weeks or 4 months or 6 months. Like, you really need to set yourself goals and then work towards them. It's no different to trading currency on the foreign exchange. I see a lot of people come in and you know, you flick through the forums and bits and pieces, and there's a lot of people saying, oh, well, it's what's happening. I've been here 6 or 8 weeks now and I haven't made $10,000. Like, the expectation was that I would have made $10,000, but the truth is you just don't have the fitness for it yet. You don't have the understanding of the market. You really need to get in there and do your time, understand the market, understand the beast behind the mask, work out why the market moves, how the market moves, when the market moves. You know, when you understand all those things intuitively, then it would be reasonable to expect some results. But before that, I don't know why you would think you would get a lot of results out of it. You have to really build that fitness, and it's like anything in life. All right, I'm just going to skip back to a chart just for a second, just to touch on something we talked about earlier. Like, we've got 24 hours in the day, but most of the volume moves inside 5 hours on the London Open, then the London American crossover. So we'll just flick back across. So this is pound JPY. It's on a 4-hourly chart. So without going into huge detail, I'm just going to skip through it. So you can see we've got periods of consolidation in here. The market's not moving much at all. So without floating the cursor and looking at the actual session times, I would suggest this is probably Asian sessions. And then you see these pushes out. So this would be the London Open. More often than not, the London Open creates volume, and it generally creates direction as well. They're a fairly confident bunch when it comes to trading. So they'll push out these levels. So in 4 hours, the market covers their... so what do we got? 130 odd pips. And in the previous entire Asian session, it's probably covered a third of that. Again, after the session, you get some consolidation, then a push, a bit of consolidation, then a push, a bit of consolidation, then a push. You know, consolidate, push, consolidate, push. You know, I think you can see what I'm trying to say is that when those 5 hours, whether it be the London Open or the British American crossover on the currency markets, the volume really comes into it and you really get to see some movement then. So a lot of people really, they get on early, they burn out, they waste their energy, and then by the time that they need to have their focus and their concentration in place on those 5 key hours in the market, most of their energy is being spent for the day looking at markets that aren't really moving. So I'd suggest that you really pay close attention, especially to that British Open, and just spend a couple of hours there every day. And literally for the first 12 months of your trading, like, get on there 3 or 4 nights a week for 2 hours and just watch it. You don't necessarily have to trade, but just watch it, build that fitness. You know, you'll start to learn things that you wouldn't even have considered learning, and you'll build this intuitive relationship. You know, you might look at specific pairs. You could look at whichever pairs resonate with you. It doesn't really matter as long as you're on at that times a day and just watch how the market really responds when that volume comes in. I think it's really key to building an education in currency trading. All right, guys, I haven't got much more today. I hope you enjoyed that. Just leave comments below, subscribe to the channel, and I look forward to talking to you guys in the next video. All right, cool.